Hi, my name is Rob Edwards. I'm Executive Chairman of Bluejay Mining. We're listed on the AIM exchange in London. We're also listed as an OTC stock in North America and also on Frankfurt. We're currently capped at about $11 million US. Our EV is about $7.5 million.
Rob, thank you very much for the introduction. What is Bluejay Mining?
Bluejay Mining is a discovery entity. We seek to discover projects of commercial worth in Finland and in Greenland, two jurisdictions where the company's been active for a long time. In Greenland, the assets are of scale, of district scale. In Finland, they are prior mining districts, which we are rediscovering successfully. But we have several projects within the company, which arguably, if we divided the company into three companies, we'd have three pretty interesting juniors within that setup. So we've kind of struggled, I think, to articulate to people the scale of the opportunity in Bluejay. Historically, the company advanced a mineral sands project in the north of Greenland, which we've now recently classified as non-core because it is unlikely we'll be able to realize commercial value from that project after several years of trying to make it work. But the recent drilling didn't meet expectations, and it's just a difficult low-grade project in a pretty remote region. But we are fully focused on battery metals across a whole range of the elements that fall into that bracket, from nickel to cobalt to PGMs to zinc to germanium to copper as well. So we have a great story to tell. We are in good jurisdictions, low-risk jurisdictions. We're in jurisdictions which both are supportive of mining, and we aim to create a fresh narrative about ourselves, which really does justice to the assets that we have. And
Rob, if I read that back to you, it sounds as if you're a kind of an exploration development company with a portfolio of assets, but you're not an exploration geologist. You're, disclaimer here, I've known you for 20, possibly longer, 25 years, I think, since we first met in West Africa. You're not an exploration geologist. You've got a varied history as a mining engineer, analyst and banker. And yet here you are in an exploration and development company. Before we get into your relationship with Bluejay, can you tell the viewers a little bit about your heritage and your philosophy and what your kind of core areas of expertise are?
Well, I think, Merlin, you've touched on an important point. I mean, I didn't foresee taking this role. I took this role because I had an historical interest in Bluejay and a historical interest in Greenland through another company called which is now called Energy Transition Metals, which holds a Kavanagh rare earths projects in the south of Greenland. I was already I'm an emerging markets mining analyst for a long period of my career. Frontier jurisdictions really interest me, and I've always had a philosophy of trying to be in the next part of the world where things happen from a discovery perspective, recognizing that as long as you identify world-class assets, everything else can change. Governments can change, commodity cycles can change, management can change, shareholders can change, project dynamics can change. But as long as you get hold of world-class assets, you should be fine over the long run. And I think in Bluejay, when the opportunity came up, which I wasn't expecting it to, I thought about it long and hard, recognized the company has some challenges. AIM is not traditionally a market which I'm active in, although I am a director of another AIM company. But I thought on a 5 to 10 year view, this is going to be really, really interesting, just geopolitically where the world is, with the assets we have, and the opportunity to reshape a company which I think could slightly come to a dead end in terms of how to strategically move to the next level.
I mean, of course, lots to unpack in that. You talk about Greenland and world-class assets. As an exploration geologist, which is my heritage, whenever I approach Greenland, I do it with caution because I know that it's very expensive operating there. And world-class assets large assets can be expensive to to explore for, and we are in this point of a cycle where for the last 3 years there's been there's been this kind of increasingly punitive cost of capital of equity for exploration, and I just wonder, is Greenland still a priority for you, just where we are in the cycle, or are you looking to take a slightly more, I don't know, defensive approach to your targets coming up, and kind of perhaps spend more of your time and effort on the Finland side of the portfolio?
Most recently, we have spent more time in Finland, primarily because we believed, and this has turned out to be true, that for a small and modest amount of capital, we can drill high-grade intersections of base metals, which would appear, if at scale, to be mineable. And we've done that. And we have several targets in Finland. The market was completely unaware that we, in fact, had a finished portfolio. We had challenges getting a program away in Greenland, primarily because of pack ice at Kangerluarsuk, primarily because of a slight hiatus in activity in our JV with KoBold Metals at Disko. You're right, there is a short exploration window. It is relatively expensive. You have to plan far ahead. You have to be able to execute. And there are the first wave of junior companies in Greenland. Hardly any of them have been naturally successful and had the progression that you may expect a junior company to have in another jurisdiction where it's easier to explore, in Africa or Western Australia or parts of South America. So projects like Ironbark Zinc in the far north of Greenland have been around so long that I remember pitching to them to raise capital 10 years ago, and they're still there. They're very far north. Greenland Rubies has not been successful. Even Amarak today, which is a successful company building a gold mine in the south of Greenland, this is the second version of the company. They had to recapitalize and think again. But I think, Bluejay aims to be part of the second generation of companies active in Greenland, which actually delivers a project and takes it through to the highest point in the S-curve, which it possibly can. Now, to do that doesn't mean that if you do find something which you want to develop in a mine, it doesn't become a mine. There are lots of mines in Arctic conditions which operate 12 months of the year. And I was on the board of Norilsk Nickel for 8.5 years. That's in the Arctic Circle. If we think about Red Dog, if we think about Polaris, both operated by Teck Cominco, there I can name you a dozen successful commercial 12-month-a-year operations in Arctic conditions. But the exploration phase is painful. You have to be very effective with your dollar. You do spend money on helicopters. It's unavoidable. But where we are on the coast, you can access a lot of projects by boat as well. Both of our projects in Greenland which are Kangerluarsuk and Disko, are reassuringly close to Ilulissat, which is developing as a city. Not really a city, but it's a large town. It has international flights now. We're an hour away from both of our projects to our office and accommodation. It's relatively easy, but the seasonality is tricky, definitely. But the prize is potentially very big.
You mentioned KoBold Minerals. This is the kind of the billionaire AI plaything. When I look on their website, they seem to be kind of quite excited about stuff in Zambia. And you mentioned that there was a hiatus. I see that they've just published in late 23 the geophysical results from the surveys that they did in 2022. What's happening with KoBold and Disko? Because you've got big geophysical targets, but they're deep, and are they engaged? Are they going to actually be spending some money?
We are both committed to instituting a program for next year. When that deal was signed between Bluejay and KoBold, it was unconventional for a couple of reasons. It was quite short in terms of tenor. It was only 3 years. And it wasn't particularly generous in terms of funding. I know that Bluejay had looked at another deal from a big mining company, which was, a multiple of the dollars committed in the KoBold deal, but over a longer tenor of time as a traditional farming deal. So the KoBold JV is structured unconventionally. Bluejay is the operator. I think that in the first season there definitely was an overspend by KoBold. I think they found the conditions a little bit more challenging, and just the fact those targets you mentioned, they're deep. They're no deeper really than many nickel sulfide targets around the world. We're talking about tops of structures being at 300 to 400 meters and going down to 700 meters. But there is no reason that those targets wouldn't be drilled, and they should be drilled. And that's why the JV is structured the way it is. There is a drilling commitment requirement in it. And if that dollar threshold isn't met or the drilling commitment isn't met, then control reverts back to us. This is a long-term project. I mean, clearly the project doesn't drop dead at the end of that 3-year period, which is December 2024. We are very committed to advancing that project. There are other big interests in the area, namely Anglo-American, who staked ground around us. And we're very confident that the targets we have are all of merit. That's what partners have both agreed on. It took a while to get to that point, but we are there now.
Have you got traction with their technical team? I mean, are you able to contact them, or are they off in their mega yachts, or are they actually behaving like a real company?
I mean, KoBold has come from nothing to having a very big team, a lot of programmers, a lot of data. Their flagship project is very much Zambia at this point in time, and I think that's going to suck up a lot of their resources. But yes, we do have a regular dialogue with them. If anything, a slightly, Bluejay, I think, can add more technically. We have a very strong geological bench. We have all the historical data on Disko. There have been many PhDs written on that area and our licenses. There is, in fact, Falcon Bridge drilled a hole there, and that core is in Copenhagen. That hit some pretty impressive and spectacular gold grades at the bottom of that hole, but it was stopped in mineralization. When Cairn Energy had Disko, they were drilling for hydrocarbons and they were pulling out sulfides from our Big Valley targets, but no one ever logged it as such. So there's a lot of smoke there. There's no reason why those targets wouldn't be drilled. I think that Bluejay is starting to contribute more on the technical side, so it becomes more balanced from a technical perspective. The way that our joint venture with Rio operated in Finland is that we had control of the budget, and we basically had a very high weighting in terms of technical input, which we presented to Rio on a regular basis. And that is the way that we like to work in terms of a JV.
Well, let's jump over to that project in Finland, because when I look through your presentation, that's the Enonkoski project.
Correct.
Rio Tinto pulled out of the joint venture, and yet when I look at your suite of assets, that's the one, it's got the juiciest headlines. I mean, 33% at 4% nickel, 33 meters at 4% nickel, and 19 meters at 6% nickel. Those are pretty exciting numbers by most measures.
Commercial.
Is more than commercial. Is that your flagship, and why did Rio Tinto pull out, and what's the plan there?
It was a big license there. They pulled out when it was time for them to either take control, so move to 51%. They spent $4.6 million, which we basically have kept in terms of data. We have 100% of the project now. So big mining companies, as you know, Merlin, they go into JVs and they pull out of JVs for different reasons. I know that Rio has a large license in the north of Finland, but we weren't the only joint venture that they pulled out of in Finland. Rio don't have a big nickel portfolio, as you know, but they only really worked around one of the targets on Enonkoski, so the rest of the belt remains open. There is a lot of work to do there. Since that joint venture came to its end, we have had more than one big nickel/base metals miner approach us to look at Äänekoski. And they are excited by it. But Citi wanting to sit back and look at the whole belt in its entirety, because there's clearly a big system here. It's clearly fertile. And, you know, what we know from the work from Rio is around one end of it. The rest of it is open. But, you know, I think that your observations are correct. Because that JV ended, I think the market decided that Äänekoski was somehow dud. And there we were saying, well, we've got this great Finnish portfolio. Our stance hasn't changed. We do think we've got an interesting Finnish portfolio for which the companies receive no value. And certainly where we're capped at the moment at $11 million US does not represent what we have. Lots of single asset companies capped to that level. I can't think of one company that has 2 district scale opportunities in Finland and 3 really interesting licenses as well in Finland. 2 district scale opportunities in Greenland, rather. But I think for us, it's about unlocking these layers, which we have to do.
I've seen over time that the people that have many children are either in kind of in impoverished countries where you need the kind of labour and you're not sure that they're going to make it through to adulthood, or in developed countries, they're people that can afford loads and loads of school fees. And because children are expensive and you've got to feed them all and kind of clothe them. And it's in some ways, it's a little bit like mineral exploration companies. You know, a company with lots of mouths to feed needs to have lots of separate budgets. If you don't have the capital resources and an income stream, you've got to fund that through equity or alternative deals, joint ventures and partnerships. How will you fund your large brood of projects or children going forward? I mean, it's a tough market out there. So what's the plan?
Yes, and isn't it tough? We've discovered that through having to do 2 very painful issuances of equity this year. So I, in my current role, have to deliver survivability of the company and also have to fuel budgets into next year.
Yeah.
There is where the mispricing comes in, and I can't divulge all of the details, but where the mispricing of our company comes in is that there is significant strategic interest in our assets. And we've pointed to this as much as we can. The next milestone will be delivering 1 or preferably 2 strategic investors before the end of this year. So we would aim to replace and perhaps enlarge Rio's prior commitments in Finland. So that will be when we present ourselves to strategics. You know, we fall naturally into two silos. One's Finland, and one's Greenland. Greenland is a slightly different challenge because they're just earlier stage. There is strategic money interested in Bluejay's efforts in Greenland. Now, we've got all the bad news out there in terms of having to retire basically Dundas and seek also strategic partners for that, which I think we've already had 1 or 2 inquiries on that, interestingly, for people in the mineral sands sector, because that whole region should be consolidated. So, but in terms of Greenland, we have interest specifically out of North America, non-sectors money, but supply chain orientated money of the type of which there is a pool available, and that pool continues to be available. I don't know if it would be available forever, but we'd be mad not to align ourselves with one of them, which will send a message to the market saying, hey, here's market caps in round numbers, $10 million. Why has Bluejay been able to attract a JV commitment of X in Greenland and another commitment in Finland worth much more than its market cap? There's a mismatch here. So that's my sole job. That's all I'm focused on, is delivering that strategic capital, which isn't dilutive to shareholders. which changes the perception that we're perpetually on the verge of going bust or about to come back to the market for another issue, which changes that perception. So we don't have to go cap in hand back to our AIM-based investors for another round of G&A capital to keep us alive. What we showed with the modest amount of money that we raised in late June is that we were able to take that money and we were able to put some cheap, quick holes in Hammaslahti, and we hit mineralization every hole. What more could you ask for?
And that hasn't been released yet, or it has been released yet?
We're working on that, but we have told the market that we hit mineralization every hole.
Okay. Yeah,
I won't discuss it. Yeah.
No, I thought. Good. Okay, so effectively, it's the old school project generator or prospect generator model now, where you attract capital into your projects, potentially with a cash element to give you funding so that you can cover your G&A and potentially do a tiny bit of self-funded exploration on the side.
Yeah, you could quite easily pencil in a $20 million budget for Disko over the next 4 years. You could quite easily pencil in a kind of $10 to $15 million budget on Kangerluarsuk, which would attract a major. I'm pretty sure people are interested in that because of the sheer scale of the opportunity. It's a large basin, a 5 kilometer discovery zone, historical grab samples of 40% zinc, and lead and silver, germanium, copper. There's a lot going on there geologically. Why that merits a drill bit, and it will get a drill bit. It's our job to make sure that it does, and that transforms the perception of the company. And because we can take, having a portfolio is a commitment. As long as you're not funding them all at the same time and they move at different speeds, you have to be very sure. If you rank all these projects from 1 to 5 and you have your non-core bin, which is, there's a couple of assets in there. One of them we put into Metals 1, which is just listed on AIM. So we own 29% of Metals 1 PLC, which is drilling in Finland and in Norway. But if you rank them, we have to be very sure that every dollar we spend generates a milestone. We don't have the luxury of having the kind of ambitious spend that the company had 5-6 years ago when it was pushing Dundas very hard, and with the expectation that was going to deliver a mine. So we've been through that phase.
Yeah, the market's completely different. I mean, one has to be defensive in this
sure.
Phase, and one has to find other people strategics to fund it. Good. Just to wrap up, the kind of the key news flow to really be a catalyst for the company will be whether you can deliver a strategic one or two by the end of the year. Is there any other news flow to kind of keep an eye out for? And I'll come back at the end with a question about your cash position.
Yeah. So immediate news flow is the fully interpreted assays and our interpretation structurally of the drill intercepts that we got at Hammaslahti. I mean, Hammaslahti is a former mine. It was mined from surface as copper and zinc VMS deposit with some pretty interesting gold byproducts, completely open at depth. Bluejay's predecessor drilled what we now refer to as the E-lode in 2015 and hit 2-3% copper with some gold and zinc. Didn't drill it again. So Bluejay had never drilled the E-lode after it was consolidated into Bluejay in 2016. So we now understand that the E-lode story is very much intact. We now also believe that there are other structures to be drilled down along the plunge of that structure. So my gut feel is, and I have my old mining new business hat on, is that a back of the fag packet calculation suggests that we need to get to a 10 million ton M&I resource at good grade, and then we've got a mine. And part of it will be mined from surface. So that's my vision. That's my North Star for Hammaslahti. And I think with not a great deal of capital, we can move the project along to that point. And after that, it's the strategics, and we have to deliver one, ideally two of those, and then we are away into 2024 without having to ask for that much capital from the market. And we'll try and really keep that down.
What's your cash? Are you kind of sub £1 million at the moment?
Our cash burn rate as a corporate is about £900,000 a year. That's our burn rate, without doing any work in the field.
The joys of being a listed company.
Yeah. So we have rationalised. We've had to downsize the team a little bit. Myself and the CEO are on 1/3 salary. We have been since the middle of the year, and none of the directors get paid. But that is the reality of running a junior company in the current market conditions. We have to plow on, and we have to keep our eyes on the long-term horizon, because I think, as you know, we are in a cyclical industry. Every cycle is different. I don't know what's going to be the trigger for the next uptick, but clearly, in a risk-off macro downturn, it's pretty unpleasant. And but we will get there.
Keep plugging away. Bring in the strategic, and I look forward to hearing the news once that's in the bag, and we can talk about the plans for 2024.
Thank you, Merlin.